Welcome to Turning Hard Times to Good Times. I'm your host, Jay Taylor, and I'm speaking to you from New York City, borough of Queens, on March 16th, 2021. And I want to thank all of you for listening to this show, making it one of the more popular shows on the Voice America Business Channel. Encourage you to continue sending along your questions and comments, whatever they may be. And we do want to thank our sponsors for making this show possible. Today's sponsors, SK Mining Corp., Noble Resources, Sitka Gold Corp., El Oro Resources, Irving Resources, Hannon Metals, Fury Gold Mines, Great Bear Resources, Lion One Metals, and Firefax Gold. I've titled today's show, Central Bank's Deception of Monetary Reality. Chris Powell, Michael Oliver will return, and Patrick Highsmith of Firefox Gold will visit for the first time. If individuals created money out of thin air, as central banks do, they would go to jail for counterfeiting. So let's be honest. Central banks are used by government to deceive the voters into believing that kind-hearted politicians really care about them and are giving them gifts like the $1,400 checks that are being sent out to most Americans right now. This scheme works best for politicians because they win votes, unlike the more honest approach of financing government by taxing the public to pay for the gifts that government gives to people. Because the negative effects of printing press money is not seen. They are not seen and understood by the masses. So they can be easily fooled by printing press money, not so much by taxes. The ability of politicians and their central banks and their partners, as they really partner with government, to pull off this deceitful practice depends on retaining faith in the dollar. Because if people come to realize that the dollar is in fact a worthless IOU, the government and the bankers it sleeps with would no longer be able to pull off its counterfeiting scheme. At that point, it would be game over for these government banking thieves. And that explains why bankers and governments have to do their best to suppress the price of gold. In an essay written by Alan Greenspan in 1966 titled Gold and Economic Freedom, he explained why our increasingly socialist government must keep control, some control at least, over the price of gold. In summarizing his article, Greenspan stated, and I quote, "This then is the shabby secret of the welfare state's triad against gold. Deficit spending is simply a scheme for the hidden confiscation of wealth. Gold stands in the way of this insidious process. It stands as a protector of property rights. If one grasps this, one has no difficulty in understanding the politician's antagonism toward the gold standard," end of quote. Well, Chris Powell will be with me in the second half of today's show to talk about how price discovery for gold and silver is being denied and manipulated in the short term to profit large bullion banks and to aid and abet government's propaganda in order to retain confidence in an intrinsically worthless currency like the dollar. In just a few minutes from now, Patrick Highsmith, a geologist who works closely with Dr. Quinton Henning, will be with me to talk about Firefox Gold, which is one of two junior mining companies that have locked up all the highly prospective land in Finland where a new gold exploration rush is taking place. But right now, I'm happy to tell you that Michael Oliver is with me once again. We want to get his comments on the markets as he sees them at this point in time. Thanks for joining me, Michael.
Hi, Jay.
Always good to have you here, and I know a lot of the people, we've seen a resting period over the last couple of years or so here for gold. Well, over the last year, seems like a couple of years. I don't think it's been that long. But gold has gone nowhere. Gold miners are starting to perk up, though. What are your thoughts on gold and the gold shares right now?
Well, ever since it began, we've viewed the pullback since the August high of last year in gold, silver, and the miners as a correction, not an end of the bull market. But there's a lot of skeptics out there who've, thrown out the idea that it's all over, that's a top, et cetera, et cetera. And our long-term technical work just doesn't justify that conclusion. It's an intermediate downturn, and we think it's coming to an end. And we probably have seen the low, and I think with gold's action this week, if you just hang around and close about where you are right now, we've got some initial good signs from gold that it's turning back up on our momentum work. But what's more important are some other metrics that we're looking at. We all know that the gold miners, we describe them as a puppy dog on a leash. They're yipping and yapping, and they'll rush ahead of gold in the upside, They do better than gold, outperform. And on the downside, they panic and they do worse than gold. Well, sure enough, since August, the gold miners have pulled back in price and pulled back more than has gold on a percentage basis. Therefore, they've underperformed gold. Though in the long term, if you look at the long-term spread between the two, it's a pullback that looks safe. We've got a breakout now. The gold miners are behaving in a way that we can measure that says, okay, that pullback in the relative performance of miners to gold is over. We're turning. Now, the thing that's important about that is that is highly linked to the net direction of gold and the miners. If the miners turn up relative to gold, it's almost always a sign that the net trend of both is going back up, with the miners at the leading gold, the leash pulling forward. So we're very optimistic what we see lately going on here. There's another interesting chart we sent out today to our gold silver subscribers that one of our subscribers asked about SII, which is a stock symbol for Sprott Incorporated. Now, Sprott Incorporated is not in the mining business itself. It is probably the largest asset manager and fund and ETF provider in the arena of gold and silver. They have bullion trusts, silver and gold. They have mining ETFs, etc. And it behaves, if you look at a Sprott chart, and by the way, that company came into being in the 1980s, so it's been around a while. It's not something new. And the stock was issued in 2008 and 2009. It's traded on Toronto and New York Stock Exchange. But anyway, that if you look at a price chart of SII and compare it to gold, it's almost a perfect replica, especially over the last year or two. We made a low in March like gold. Remember the sell-off in March last year?
Yep.
Then it exploded into August, made a high coincident with gold, same timing, and silver. Pulled back sharply from that high, corrected. But all of a sudden it ground down to a low. I think it made its low in January, Sprott. And gold has recently made a low. Sprott's back to its highs. Explain it.
Yeah.
In other words, if the largest asset manager and fund provider in the gold arena, if gold is topped and is no good anymore, like some skeptics say, why is this symbol, this leading investment symbol in the gold arena, behaving so well? Why is it back to and making new highs above those of August? I think it's just another hint that the skeptics are wrong, and that this pullback in gold is wrapping up, and we're ready to resume.
Well, I know these people very well, and Eric, we've had, of course, Eric Sprott on the show, the founder of the company, as well as Rick Rule, who's on the board of directors, and I think resigning now from his current post, but still on the board. Very much aware of this company, and they do also provide financing for projects in the mining sector. So these are really smart people. They know very well, in addition to the ETFs that you mentioned. But yes, these are people that know this business very, very well, no doubt about it. Go ahead. I'm sorry to interrupt.
So anyway, I just think it was, you could call it peripheral or marginal, but there's too many of these things occurring now. The miners have clearly shifted their performance trend by our metrics back to favorable versus gold. And that is always, you can overlay those spread charts of the gold miners versus gold. And when they top back in August, sure enough, gold declined and the miners declined. When that spread turned up last week and this week, it's a sign that we're ready to resume upside. So
very good. All right. Well, just with a couple of minutes left here yet, what else, Michael? You mentioned T-bonds. You got your eyes on. Everybody's got their eyes on T-bonds.
Well,
what are your thoughts there?
There is a good linkage, and it will not last. A lot of linkages that people identify in markets, they're good for a while, and then they don't work. And in the case of gold right now, the T-bonds, futures in particular, and T-notes look very much like what gold's done. They made a high in August, monthly closing highs. They pull back arm wrestling style and picked up a little steam here recently on the downside, meaning higher yields. But if you look at their charts, they look just like gold. And our suspicion is that while T-bonds are going to be in big trouble in terms of higher yields coming, looking out a year or two, that there's one more rally left in the T-bonds, meaning a drop in yields again. And we suspect that's going to be correlated to drop in the stock market. Not a crash event like March of last year, but a pullback that causes, again, investors to do what? Turn to the two major alternatives to the stock market as currently perceived, and that's gold and T-bonds. And it looks to us like T-bonds are about to bottom and turn up as well, although I think that we'll divorce gold later this year. But for now, I think the linkage still exists, so we'll see.
So, Michael, just real quickly, do you think then that rates as they edge higher here might at some point just cause the equity market to start its decline?
Well, yeah, see, I think everybody thinks if rates will drop, that'll help the stock market. Well, why is it that the stock market has risen all during the period where T-bond rates have risen since August last year? So it's actually the opposite. So I suspect what's going on is if the stock market wobbles down to the downside here, and I think we were about at that cusp of that right now, led by the tech sector, by the way, and financials, I think the T-bonds will have another sharp rally. Where investors, rush back in to get the yield and the so-called safety of the bonds. Though I don't think that'll last ultimately.
All right. We'll wait and see, but it certainly makes sense to me. Thanks so much for being with us, Michael. And we'll look to talk to you in a couple of weeks again.